Potential price reversals in binary options trading occur when an asset's price changes direction after a sustained trend, presenting traders with opportunities for profitable trades. Identifying these reversals is critical for success and requires a combination of technical analysis, market awareness, and strategic timing. Reversals typically occur at significant support and resistance levels, where the price has historically struggled to break through or maintain momentum. For instance, when an asset's price approaches a strong resistance level, it may reverse downward if selling pressure outweighs buying interest. Similarly, near support levels, the price may rebound upward if buyers step in to defend the level. Technical indicators like moving averages, relative strength index, RSI, and candlestick patterns such as hammer or engulfing patterns are commonly used to detect potential reversals. Divergences between the RSI and price movement often signal weakening trends, hinting at an upcoming reversal. News events, economic data releases, or unexpected geopolitical developments can also trigger reversals, as they shift market sentiment dramatically. To trade potential reversals effectively, traders should confirm the signals with multiple indicators or patterns, avoiding reliance on a single metric. Timing is crucial. Entering too early may expose you to losses if the trend continues, while entering too late could result in missing the optimal entry point. Setting appropriate expiry times is equally important. Shorter expiries might benefit from quick reversals, whereas longer expiries allow more room for price stabilization. Risk management is vital in reversal trading due to the inherent uncertainty involved. Traders should limit their investment per trade and use stop-loss levels when possible to mitigate losses. Testing reversal strategies on demo accounts is recommended to refine skills without financial risk. While potential reversals offer high-reward opportunities, they also carry significant risks, as false signals can occur in volatile markets. Patience and discipline are key to filtering out noise and focusing on high-probability setups. Combining reversal trading with trend-following strategies can provide balance, allowing traders to adapt to varying market conditions. Continuous learning and adapting to market dynamics enhance the ability to trade reversals effectively. For example, observing how major assets like EUR, USD, or gold behave during market open or close times can reveal patterns that help anticipate reversals. Ultimately, understanding the underlying reasons for price movement and practicing disciplined execution will make reversal trading a powerful tool in binary options. To learn more about strategies for spotting and trading reversals, connect with me on Facebook, https://www.facebook.com, Binary Options Strategy, where I share insights and proven techniques to improve your trading performance.